Hello everyone, David here from Wave Trader. Today I'm going to show you a couple of things. I like to think that this video is a sort of free for all. In other words, I want to say what's on my mind when you want to trade. So when you open your charts, what's on your mind? So these are the issues I want to address with this video. Now, as for me, when I open my charts, I want to make money. I want to profit from the market. So the first thing you need to do is find a currency pair that is trending in a direction, either going up, in other words a bullish trend, or going down. So if you put everything I've taught you together, in other words Elliott waves, uptrends, downtrends and all that, then you should be able to make informed decisions when you trade. So I'm going to use this video as an example just to show you my thought processes when I trade. I'm on the USD CAD monthly chart. So the first thing you are going to do is go to the monthly and have an overall look. So I've minimized the chart here, made it small so that you can see a lot of information. So right off the bat, what I notice is this huge move down here, and we have the Elliott bull wave here. So we have the first wave, the second wave, we have the third wave and the fourth wave. Of course, you realize that this is a huge one. This takes years. Starting from here, we're talking of 2007 all the way till now, 2019. So I'm just giving you an overall idea. So, but on the monthly time frame, this is what I see. So I can tell you that we are in the fourth wave of this Elliott wave. Okay, so we know that price is still going to push outwards in the next few years. Okay, so that means that the US dollar is going to appreciate in value against the Canadian over the course of the next few years. So if I make the chart bigger, and now my focus is just on the present monthly candle, and here you can see quite clearly that we still have another Elliott wave here. We have the first wave, the second wave, and this whole thing here is the third wave. Okay, I can actually call this the fourth wave and then the start of the fifth wave here, but that's not really my concern. Okay, all I know is that right now the present candle, the monthly candle that is forming, is bullish, and the last place that price got resisted was this point here, or this level. So from that level to where price is currently, that's over 300 pips. So that's my concern. So all I know is that price is in an uptrend, and right now I know that there's still potential to make profit going up. So from the monthly perspective, I know what to look for there. Let's go to the weekly, and on the weekly I see more definition. Okay, now because I've made my analysis from the monthly, I'm focusing on the last candle here as well, and you can see this dotted line here is the 55 EMA, the blue one is the 5 EMA, and the red is the 21. So I'm looking for an opportunity to go long here, and even on the weekly you can see another beautiful one wave bottom setup here. We have the first wave, we have the second, and this is the third. Okay, and this is the fourth, and then we are looking for the fifth wave to go on up. So let me go to the daily, and then I'll begin to make my trading decision based on that. And now on the daily time frame, I see another thing here that is still good for a bullish trade. I see a 1 2 3 here, 1 2 3. This is the fourth wave, and price is about to move into the fifth. Of course, this is a huge one. This will take probably a week or more to get to the fifth target. Okay, but the point I'm trying to make here is that you combine everything you've learned from this course whenever you are making a trading decision. So right now I can tell you that my bias is just to go long. I'm not interested in selling right now. Okay, so I see this huge wave bottom situation here, the 1 the 2, the 3, the 4, and of course we have minor ones in there. We have another one here, 1, 2, 3, 4, 5, which completes that move. But the huge one, the 1, 2, 3, the fourth one, and then now we're about to start the fifth. So this is the daily chart. So my emphasis now is here. So from here I begin to make my trading decisions. What do I see? So I can see that price is bouncing off of the 55 EMA. We just completed the fourth wave, about to start the fifth. MACD crossed here, and it's trending up. The EMA is crossed here, giving me a golden cross. Now these green and red arrows you see is just an indicator that tells me when the EMA is crossed. So they are totally optional. You don't need them. I just put them there so that when I hear the alert, I can look at my charts. So now that I know that my bias is to go long, I'm going to go lower to the 4-hour and see what I see there. And on the 4-hour chart, I hope you guys can see this. Okay, now you notice more definition. On the 4-hour chart, immediately you can see that we have a wave bottom situation here. We have the first wave, we have the second wave, and then we have the start of the third wave. You notice that the MACD has crossed, the trigger line has punched through the MACD line, and price is presently dithering at the 55 EMA level, which is what is causing this congestion that you see here. Let me make it bigger. So, but from all indications, from the monthly down to this 4-hour chart, you can see that price is in an uptrend. You will not even be thinking of selling right now. Okay, that will be the wrong thing to do. And because from the monthly, weekly, daily, and then down to the 4-hour, everything is telling me to buy, I have confidence that if I place a buy trade now, I can actually go for the long haul. Now, if you are familiar with the APAC, the calculator that I put on here, in other words, the wave calculator that I put on here, you will see here that if we were to plot our levels, okay, so plotting my APAC on the 4-hour chart gives me these price levels, these profit target levels. Now I normally recommend the second, okay, to take your profit, and that is good. But because I know that the overall trend is bullish and price is just bouncing off of this level here and about to start the fifth wave on the daily time frame, I can with confidence decide that I want to take the fifth, even the sixth price level as my target. Why? This is because I know that the trend is going to go that high. Okay, if we look at it from the daily perspective, if I plot my calculator on the daily wave bottom that I see here, this is where my second target is. Okay, so you see that it makes a lot of sense for me to take my profit targets of the 4-hour even up to this point. And I think from where price is now to this point, this is about 116 pips. From where price is currently to the second level on the daily calculator price levels, it's about 208 pips, and it will get there. So you see that you can make your determination either from the daily perspective or the intraday trading perspective. So for the sake of you young traders out there, let's just look at it from the intraday trading perspective. So if I plot my calculator on the 4-hour chart and I get these levels, it's okay. I don't have to be greedy, okay? I can actually take the second level here, which will give me about 47 pips, or I can go higher to the third, fourth, fifth. So for the sake of argument, let's put it on the fifth. So this is about 118 pips. Now, if I go to the 1-hour chart, you can see more definition. Here you begin to see it quite clearly that we have the wave bottom that we are looking for. This is the ideal wave bottom situation that you are looking for. So this is the first wave, the second wave, and the third wave has just begun. Okay, Now if you had gotten it at where the EMA is crossed here, from that point all the way to price reach at this level, this is about 54 pips. That's a good trade for a day. Okay, now price has bounced on the 55 EMA on the 1 hour chart, and as you can see, MACD is crossed and trending up. The EMAs are crossed and trending up, so everything here is telling you to buy. Okay, price is above the 55 EMA, and this arrow here tells me that the trend is going up. So you have confidence to actually go long on this trade. Okay, and of course your stop loss will be below this point. Okay, in other words, at the 38% fib level. So if I were to get into this trade here, where would I take my profit? That is up to me. I can choose the second price level, profit level, the third, the fourth, even the fifth. So it's all up to you now. Since you know the general direction of the trend and you are quite confident, you can actually decide on the fifth, even the sixth target. It's not a problem, and you are not wrong. Okay, you are not wrong. It's going to get there. Okay, so what else do I see here? A lot of people tend to get confused about where to place their stops when they see a wave bottom or a wave top. What I will recommend and what I'll advise is, when the EMAs give you a golden cross in a wave bottom situation, okay, anywhere between the number 2 and the number 3 point is ideal for you to get into this trade. And when you get into this trade, placing your stop below the cross, anywhere below the cross, is ideal. Okay, it's not often that price will come back and take you out if your stop loss is below the cross. So where price is currently, if I happen to get into this trade from here to where the cross is just 39 pips. Okay, considering how much I stand to gain, about 118 pips, 39 pips, it's okay. But still, if you look at this situation here, let me make it bigger, you can see that there's no need to go that low. Okay, price has bounced off of this point here, giving you a valid support, because here it was resistance, okay, and now here it became support. So if you were to get into this trade here, then it makes sense to place your stop just below this spinning top here, which is about 23 pips. This is very good for the return you are going to make. So this is how you get into a trade. First thing you need to do is have a look from the top. In other words, have a look from the monthly perspective. Determine where the trend is going. Now, starting from the monthly doesn't necessarily mean that that's where you make your trading decision on. Okay, even though I can tell that the overall trend is bullish, that doesn't mean that I may end up taking a bullish trade. Maybe if I had gone down to the 1 hour, I could have seen a bearish trade to take. But the point is, this helps you to know the general direction of the trend, and you align yourself generally in that direction. Okay, you tend to make money easier when you follow the direction that the trend is going, the market is going. So as you can see here, that if you start from the monthly to the weekly to the daily, it makes it so much easier for you to define the trend. Okay, you don't have to make hillbilly guesses, you don't have to make Hail Mary guesses. All you have to do is just calmly look at what the market is telling you and make your trading decisions based on that. Okay, thank you.